So I don't think we're in like a full-on bear market. I think we're obviously in a weak portion of the cycle, and Bitcoin has been roughly flat for 12 months now. It's kind of had a lack of catalyst. It's kind of one of those things where, it gets ahead of itself for a period of time and then corrects. And some of those corrections go on for 6+ months. This one basically went on for 12 months, even though there were new highs along the way. I've kind of been in the camp of always kind of being a bearish bull, which is I try to avoid price targets, more focused on direction because you can't necessarily predict like illiquid moves and kind of euphoric periods or kind of lack thereof. But when I do get kind of cornered into giving a price target, I think one of my main ones was 150K for this year. So it looks like we probably not going to touch that, but like John said, we still have 2 months to go, so we'll see what happens. And so that's like, we hit 125 or change. I had a similar thing last cycle where at first my target was a trillion market cap, which was somewhere in the ballpark of 50K. We touched that. And then I gave a target of, I think we'll hit 100K. That was still lower at the time than many of the bulls. We ended up not reaching that. We ended up only getting 69. So far we're kind of in a similar thing where we kind of hit initial bullish targets, new highs and all that, but then kind of stagnate a little bit. I generally wouldn't look too much into this whole kind of 4-year cycle aspect. As the halvings continue, the new supply is a much smaller component of the total supply and demand out there. It's more about what price will unlock coins from existing holders, either because they want to sell into bullishness or because they're selling into weakness. They're afraid of their position. Either one. That's the type of thing that can really kind of affect price more so than what is the kind of the rate of new coins hitting the market at this point. In addition, prior cycles, because it was a much smaller illiquid market, and with kind of in general on average less sophisticated kind of participants, not necessarily in terms of like intelligence or anything like that, but in terms of hedging, in terms of kind of how they tend to rebalance and stuff like that. We had kind of more non-financial people involved. Basically, people that are sophisticated in other areas, not in terms of like sort of portfolio management. It didn't really follow normal rules of assets. Whereas now that it's kind of held by those who tend to hold other assets, they tend to treat it like they do other assets, which often results in rebalancing and things like that.
Yeah.
And so in prior cycles, like the market cap would get way ahead of the on-chain cost basis. And so it kind of like some of that price spike would be ephemeral because it's like it didn't really reach that price on a sustained basis. It was just kind of like a small number of coins would then, when you extrapolate over the whole market cap, kind of say this is the current price. But it wasn't like a price that was kind of a very liquid price. And so I think we're past those kind of periods of just massive disconnects. We still have the on-chain average cost basis inching up at this phase. So I generally think that while it's been weaker than expected, I generally view that the cycle is going to go on longer than expected because I think we're driven by other things, ranging from regulatory actions, ranging from liquidity, ranging from all sorts of other things, fiscal, economic stuff, and very much less so to a nearly negligible degree the supply halving cycle.
John, any reactions there? Are there any macro vibes out there that, like, I'm channeling Steven and Vibes Capital Management? Are there any macro vibes out there that you think are kind of affecting your expectations?
Yeah, I think a couple of things come to mind. One is speaking, I think Steven said this on Twitter. He said JP Morgan is more bullish on Bitcoin than Bitcoin Twitter is on Bitcoin, which I
Yep.
think is a funny and true observation at
As
this
we
point
saw
in
with
time.
the 170K, right?
Exactly.
Yeah.
Excuse me.
Scary.
So yeah, that's what he was referencing there. Um, and I think, Lyn, this is something you have said in the past. I consume so much Bitcoin content, I often forget who said things, but the kind of disconnect is largely attributable to reality versus expectations. I think if you surveyed most Bitcoin enthusiasts, whatever you want to call us, at any point in the last 12 months, most people would have thought the price was going to be a heck of a lot higher than 102K in November of 2025. So that disconnect between reality and expectations, I think, explains a lot of the sentiment. Lyn mentioned a valuation metric, and it got me thinking about this, which is when I look at a whole bunch of things that in hindsight did point to or predict or just precede the 2022 sell-off, and which again in hindsight was a 2021 of November peak in the Bitcoin price of 65, 68K, whatever it was. If you look at things like the rate of inflation, CPI, rate, where interest rates were going, where central bank balance sheets were going, where M2 money supply was going, the magnitude of U.S. deficit spending as a percentage of GDP, valuation, Lyn already mentioned that, and a few other things which maybe we'll get into. But all those things I just listed, when I look at them, none of them are doing what they were doing in late 2021 or early 2022. So I think there's kind of two things that are on most Bitcoiners' minds right now. One is like, hey, why are we chopping sideways? But then the next question is, did we peak at 126K? Was that the peak of this cycle, quote unquote? And I have that on that second question, I feel pretty confident that was not some sort of peak of a cycle. It just doesn't look anything like the last peak in terms of all those different metrics that I mentioned. Yes, I do think market structure is a little bit different this time. I don't think we will get to as exaggerative of a peak as we did in November of 2021. But man, I will be absolutely shocked if 126K in early October of this year is some sort of peak of a cycle, meaning defined by I'm of the belief that we're going to overtake that peak at some point in the next 9 months. But curious what you guys think about that too.
I mean, I think, I do not think the bull run is over. I do think it's going to extend. I think we're in a period now. It's just going to be different. It's it's a much larger asset, or at least it's more exposed to much larger pools of capital, to much more sort of advanced money managers and finance types, and that I think will mean kind of when price runs, it'll be, like Lyn was saying earlier, you're going to adjust portfolios, you're going to rebalance, things like that. And I think that it's just not going to be, it's not going to be affected by halvings anymore. I think cycles were affected by halvings to pretty great extent, especially like progressively less, but enough. There was enough new coins being issued that it sort of affected the supply demand dynamics. And I don't think that that's really the case anymore. The new supply coming out is so small relative to the size of the asset now. So I think we're at a point where we're not going to see 80, 90% crashes anymore. There's enough big money on the table to snap that stuff up. That's smart money to be able to say, okay, this is at a 30, 40, 50% discount. This is a great time to buy, as opposed to retail investors who will tend to panic and stay panicked and just become increasingly panicked during a move like that. So I think there's a higher floor now than there used to be, probably a higher ceiling as well because of those types of dynamics like rebalancing, et cetera. And I also agree that there's macro conditions that are positive, promising for Bitcoin continuing to suck in fiat. Liquidity's rising, interest rates are dropping, and Bitcoin's made this whole run in a macro environment that's been, considered, I think, in a, like well-founded way to be an environment where you wouldn't expect Bitcoin to do so well. So now that we're kind of going out of the QT environment and into a more QE environment, I see a lot of money potentially coming into Bitcoin from just those dynamics alone. So I don't think it's over. I think we're going to kind of grind for, the foreseeable future, unless there's some kind of like hyperinflationary event or some kind of huge geopolitical event or something that would drive, Samson Mao's Omega candle or something. I think we're in a world now where price is just not going to be as fun or as terrifying to watch.
Yeah, I think an example to be familiar with is the Mag 7 stocks. Basically, these really kind of mega cap US tech stocks over the past 15 years. For a lot of them, if you ask, what cycle were they on? I mean, not a
Yeah.
particularly, specific cycle, and the booms and busts were muted, because they started from a larger base than Bitcoin was, 15 years ago. And they've gotten, some of them to a larger market cap than Bitcoin is now. And um, they've traded in traditional markets. And if you ask people, before the idea of $1 trillion company was, an extreme thing. And now, companies have been over 4 trillion. I think Nvidia might have touched five. I'm not sure, but several have touched four at this point, and more have touched kind of two and three. Um, and so a lot of these companies over the course of 5, 10, 15 years reached heights that most people did not expect them to. Um, and they just kind of kept like every time they would say, okay, this price to earnings multiple is a little bit high, or this is kind of concentrated. For a period of time, it might cool off for 6 months or 12 months, and then it just has another rip higher because it's fundamentally being adopted, whatever kind of product or service they had. And I think Bitcoin's kind of in that phase now where, there are some bears that are saying, 2 trillion market cap, that's kind of enough. How could it possibly go higher than that? It's magic internet money. How could it go higher? Kind of like how could a phone company, like Apple, how could that get as high as it is, or how could an operating system company like Microsoft get as big as it does, or um, and I think basically over the next 5, 10 years, it's going to kind of behave like that, where it surprises bears to the upside, where it just gets bigger and goes on for longer than they think. Um, but it doesn't mean that basically bulls are going to be entitled to 5x multiple gains in like a typical 12-month period. It's not on that kind of easy 4-year clock as it was for a period of time. And I think even the 4-year cycle, and I've done research on this, um, the last couple cycles, it was kind of a blend of the halving cycle and the liquidity cycle. And so as basically we have the kind of the importance of one declining to the point where it's almost negligible now, and then those other factors kind of gradually increasing in prominence as they affect Bitcoin's price.
And on that second group of factors, Lynn, would you agree that these kind of more macro liquidity driven factors, things like CPI inflation, Fed interest rates, central bank balance sheets, M2 money supply, US federal spending as a percentage of GDP, do you think those are kind of some of the core macro factors that are going to be affecting Bitcoin? And then if so, what's your forecast for whether those particular items are going to be generally supportive of Bitcoin's price, or the opposite?
Yeah, so I do think factors are the key drivers. Basically, the type of things that drive a lot of high quality assets up, or put kind of near term pressure on a lot of high quality assets. Various things related to the hardness of money, liquidity, that kind of thing. A lot of the factors you cited, and then as you point out, I mean, unlike 2022, we don't see a major contraction in a lot of these things. Instead, some of them take a pause for a period of time. Others are still accelerating. And so I expect the numbers to be pretty good in 2026 and 2027. Um, I think we're ending the period of Fed balance sheet contraction. We're entering maybe a flat period for a period of time, and then most likely expansion for a while. I would say not at the rate that some people think. My general view is that we're not going to get some massive QE anytime soon, but that instead we're going to return to a period of kind of structural balance sheet increases at a moderate pace, and that over the kind of longer term is beneficial for a lot of assets, including Bitcoin. Um, and it's more the persistence of it, kind of the length of it. And I think another factor that kind of weighs it is that because we have a two-speed economy or K-shaped economy, depending on how you want to refer to it, that impacts financial markets too. I mean, we've had kind of a two-speed asset market, which is if you're one of the big mega cap tech stocks or gold or a handful of other assets, you've done amazing. A lot of mid-level companies just kind of chop it along. Um, and in this particular cycle, we have not really had retail investors show up. So you don't see, for example, Google Trends searches for Bitcoin not doing particularly amazing. A lot of the demand this cycle has been on that more institutional side, which includes higher net worth retail investors as well, and including, of course, some retail investors. But it's not a very retail driven market like prior cycles generally have been. Um, and that's in part because a lot of retail investors are strapped for cash at the moment. There's not, a lot of them are financially struggling because we have kind of an economic malaise. Kind of the one thing that does look pretty negative for asset prices, but it's kind of the era we're in, is low consumer sentiment and business expectation sentiment. So a lot of the kind of the boots on the ground stuff is pointing toward weakness. And I would say the key reason for this is fiscal dominance, which is for the most part, if you had consumer sentiment this bad, it would look like a recession. So a lot of these other things would also be rolling over. But because we have fiscal dominance, we get an unusual separation from things like purchasing managers indices or consumer sentiment, these kind of real time gauges of the economy, while asset prices can kind of levitate. And that's in large part because of fiscal deficits. And I think that that's kind of a structural thing that we're in now. And so you get kind of pockets of weakness and pockets of strength, and just kind of ebbs and flows along that kind of run it hot floor.